Welcome to the Full of Tracy Money Audio Commentary. This is Owen Tracy recording, and it is 3:32 p.m. and that is Central Time, and today is October 26th. Well, we've a couple of things to talk about today. The first is that the yen is trading below the psychological 150 level, so that obviously invites the question whether the Bank of Japan is going to intervene and support the currency around this level. And then, of course, also the JGB yield is trending up towards 1% on the 10-year. I think it's around 90 basis points right now. So that's certainly approaching the area where they said that they would intervene. Now, we've often seen the market test these announcements by central banks when they say they're going to defend a level. We can be pretty sure that it's going to test it just to test their resolve. Then what we also saw here today was the repercussions of some of the earnings announcements that came through after the market yesterday. Meta, for example, was down heavily. That is really despite the fact that its advertising came in better than expected, but then in the earnings call after the close yesterday, they were talking about a very uncertain environment, and obviously they're worried about growth, they're worried about geopolitics, they're worried about the ability of companies to continue to pay for advertising. After the close today, we had Amazon reporting, and they also reported that their cloud business disappointed, but their advertising business was better than expected. Now, of course, advertising for Amazon is not quite the same thing as advertising on Facebook. Both tend to be more product oriented, but Facebook is a more broad-based advertising business, whereas Amazon is very product focused. And then obviously if you advertise on Amazon, you can expect that your sales will improve. Of course, it also means that the end customer ends up paying more for it because those costs get passed along. Now, when we think about what's going on in China, the stock market there was steadier in here today. And I think it is benefiting somewhat from weakness everywhere else. And then the trend of accommodation that is building in China. Now, is it building to a peak where it'll be incontrovertible that we're going to get asset price appreciation coming through? I don't think that's true just yet, but we're certainly seeing an unwinding of the short-term oversold condition. Then bond yields were a little bit narrower in here today, down a bit, so a little bit steadier action in the bond markets. Now that might be because the stock market has been quite weak, and we might be getting a little bit of safe haven action. Then when we think about what that means, well, over the last several months, we've had this correlation between bonds and equities, and the weakness in the bond market hasn't really affected the equity market. Now, with equities pulling down, then perhaps we could see a bit of a counterflow, and that the inverse correlation between bonds and equities could start to reassert itself. Then with the ECB pausing on their interest rates, the dollar was a little bit steadier, but it didn't hold all of its move in here today. Then we have had up and down days, just about up one day, down the next in gold. And gold prices haven't really moved very much. They were up today, but not quite yet being able to push up through the 2000 level. Very similar situation with oil prices, although they are significantly further below the recent peak than gold is. And then natural gas was also in positive territory today. Then several of the soft commodities, most particularly cocoa and orange juice, are really very firm in here. So let's go on and look at some of these charts.